Hello everyone, I am bearish overnight. I bought into some December 8th 450 SPY puts, basically expiring 3 weeks out for a few different reasons. So in today's video, I'm going to explain what those reasons are. We're going to take a look at the overall market, SP500, the NASDAQ, the Russell. Obviously, we had a really crazy day today as well, but then it ended up falling over on itself. So we're going to take a look at the large tech stocks, the VIX, and the yields as well. All right, so without further ado, let's get started with the video. So number one, this news is very important. U.S. Defense Department spokesman Kirby, Biden is to make it clear we don't support Taiwan independence. What this tells me is that this is very bearish for chips, specifically Taiwan Semiconductor, Nvidia, AMD. This is not good news for the chips, in my opinion. So now when we look at the chips, Nvidia, AMD, TSM, they all don't do pretty well. They're doing pretty bad. They had a big about face a bit after that news came out. So clearly that is not a good sign for the market. We know that chips in general, right? We know that the chips have been leading this market. Back here, strength in Nvidia and holding this trend line. The strength here ended up permeating in the rest of the market days after. So the fact that Nvidia had a big red day like this is not the best sign. So that's one of the reasons I'm bearish. The other reason is the dollar. We know that the dollar has an inverse relationship to the market. So as it rises, it's bearish for the market. So very simply, when we just take a look at this move here, we are not only did we open outside of the lower level of the Bollinger Band, right, which shows extreme overextension. Generally, when we get a green candle still outside of the bands, the next day ends up being a bit bullish as well. So this has room to bounce to at least the 38.2% fib. If the dollar ends up bouncing, then that is bearish for the market, most likely, right? So that is another reason why I am a bit bearish on the market. Number three is the yields. So this is a chart of the 10-year yield. Same concept, it has an inverse relationship to the market. So if the yields do well, then that's bearish for the market. The other important thing on the yields is that we are at the lower edge of a channel, right? Which generally should be bullish. But then more importantly, we're making a falling wedge pattern as well. So as we know, falling wedges are extremely bullish. So even if we were to break another low down here, this is a bullish pattern that ends up bouncing. So if we do bounce, once again, this is up on the yields, that would be bearish for the overall market. So that's my other concern at the moment. So this is the chart of the 10-year yield. We could take a look at the 20. The 20-year yield, all of these made new lows and are bouncing essentially. So this also tends to have another green day into tomorrow. So we're going to have to see if that ends up happening. But so far, the yields look pretty bullish. The dollar looks pretty bullish. I don't know if it's going to perfectly happen tomorrow. Of course, we can end up, bouncing back up to 452, 453. Regardless, it is what it is. Right now, the puts are up 10%. So, nothing crazy. But I did initially want 453. We didn't get that, but I saw some weakness in the market overall, so I had to take the puts. But according to the yields and the dollar so far, it looks like a nice opportunity to short. And next, let's go ahead and take a look at the VIX. So the VIX is holding this level, this low. It's also hugging the trend line lower. So as we have made this low, it gives a potential bounce because people that are long the VIX can have a nice little stop loss right below the level, and this still gives room for a small little bounce. And once again, the VIX has an inverse relationship to the market. If the VIX is rising, then that's obviously bearish for the market. And as you know, we were looking at this really disgustingly ugly setup on the VIX, but this tends to bounce. So if you guys also look at crypto, when crypto bottoms out and makes a huge move to the downside, we often see a ridiculous bear flag that ends up slanting lower, which is generally a great opportunity to long. And this is a similar situation. This basically ends up being a good opportunity to long on the VIX as well. And we also saw a lot of buyers in the VIX for January, but that is normal because into the end of the year and early Q1, people do hedge. So that could be another opportunity. That could be another explanation, but at the same time, this is a bit bullish on the VIX. So overall, just looking at those few things, the yields, the dollar, and the VIX, in my opinion, all of them are pointing to a bit of a bearish move on the market heading into tomorrow. So we're going to have to see if that actually is the case in terms of price action. But for now, let's go ahead and also take a look at the large tech stocks, because those equities really drive market price. So let's go ahead and take a look at that. All right, so a lot of these tech stocks are showing topping formations. So starting off with Apple, this is not a setup that you want to see at a top, right? But to be fair, heading into tomorrow, if we open a bit flat, even if we open above 187.50, we could retest a bit into this candle. So it's not all completely bad, but this is not the sort of setup that you want to see at a top, okay? Tesla had a big move to the upside. I still think that we are making that we will end up falling over and retesting this 230 level for a continued huge rally up into next year. So, but as you can see, Tesla is now opened and closed outside of the upper level of the Bollinger Band. But by no means is Tesla a Microsoft, especially right now in terms of AI, unless Tesla can incorporate some sort of, I don't even know, but Tesla being like this is definitely overextended. But yeah, we're gonna have to see. But in general, with Apple overextending like this, Tesla being overextended as well, it's not the best sign so far, okay? Number 3, Amazon. This is not looking great either. So we see that we closed below 143.63, about faced the entire move. But this also, so a setup like this where we gap up and then make a red day, they really just tried not to allow either side to make as much money. So they propped the market up in the pre-market. So everyone that went short at close, they would get, ripped because we would end up opening higher, and then they ended up bringing the market lower. So all of the people that ended up going short at close really did not profit as much as they could have. So this is just another tactic of manipulation, essentially, that they just did on Amazon, and pretty textbook. But basically, this is not a bullish situation. But to be fair, we are at a level of support on Amazon. We could bounce back up to 144.50, and from here, that would be another make or break level where people would have to see, where we would need to see if buyers could step in. But so far, Tesla, Amazon, and Apple aren't looking great. Microsoft, also similar situation, topping out. We don't want to see this sort of weakness at a top. This is starting to make it easy to go short. We are getting defined levels as stop losses, etc. Google also similar situation to Amazon, or to Microsoft. And Meta also about faced off of major resistance, and we opened outside of the upper level of the Bollinger Band. So generally, when we have a red day opening outside, we should be continuing lower. So Meta should continue lower heading into tomorrow. And to be fair, let's take a look at this garbage. It is also starting to get a bit overextended to the upside in terms of the Bollinger Band. You can see that the Bollinger Band is pointed lower. So if Netflix has another popping move to the upside, it will be trading outside of the upper level of the Bollinger Band after a monstrous move to the upside. So we have gone up 34% in basically a month. So it would make sense to get a bit of a pullback, but this is starting to get a bit overextended as well. People are going to start taking profit on Netflix. Let's go ahead and take a look at Nvidia and AMD. As we know, we saw Nvidia and AMD. This is not really bullish situation, nor is it a bullish setup. But you know, to be fair, once again, there could be an intraday bounce and a continued move to the downside. Same concept on AMD. Same concept on AMD. But overall, in general, these large tech stocks are not looking good. Okay. There's not really we looked at Google as well. So yeah, the large tech stocks aren't really looking fantastic. So it's tough to really lean extremely long. Any pullback that we do get is most likely just going to be a shallow pullback. So I'm not aggressive to the downside. I am in almost 3 week out call puts. So you know, I just wanted to get my feet wet on a position. So let's just go ahead and, you know, before I talk more about the SPY, let's go ahead and take a look at the IWM. Okay, so the IWM, also another reason why I am not bullish is because we opened and closed outside of the IWM. This is not a setup where you are likely to be long. This is not the best setup, right? We had a huge wick to the upside, and to be fair, similar to Apple, we could get a bit of a pullback and, you know, continue to move down. We have predefined levels that will be acting as stop losses, but regardless, same concept what they basically did with Amazon. But yeah, this is not really a bullish setup. We should get a bit of a pullback close to this trend line and then a continued move. And that's what I'm expecting on IWM. But once again, this is not really a bullish setup. Let's take a look at the same concept. Gap up, red day. Not the most bullish setup. But the issue is that momentum is there. Momentum is clearly there to the upside, but you have to take stabs at trades when they're handed to you. And I feel like this was a trade that was handed to us. We basically went short at around 450, a little higher than 450. We were showing some weakness. The dollar was overextended to the downside. Some bearish news for chips, and the IWM was also very overextended to the upside. Tesla was also very overextended to the upside, and the yields looked like they were going to bounce. So multiple reasons to be bearish. A bit, okay? If I had to, you know, if I was a betting man, I would be bearish overnight, and that's basically what we're doing with some nice, comfortable 3 week outputs, essentially, that are already up 10%. So, you know, there's my thought process. That's essentially my analysis, and that is what I hope to, you know, look at. We also have this huge gap, right? And it does make sense to have a bit of a pullback. Not necessarily for the entire gap to fill, but pullback to even 444, 445 should be on the table. At the very least, we should retest at the point where we opened on Tuesday. So there's a lot of room to the downside. To the upside, we have 453. If that ends up happening, if we gap up overnight and the puts are down 10%, 15%, we're going to sell. But since they're basically 3 weeks out, we're not going to, you know, unless like we have a monstrous move to 454, we're not really going to get stopped out. So that's, you know, we have good odds to the downside. And based off of everything that I just explained, I think we're good to go. So there's my thought process. I hope you guys enjoyed today's video. I hope the volume is much better today. I just lowered the gain. But yeah, man, I hope you guys have a wonderful rest of your day. Take care. Love you guys. Have an amazing day. Thank you.